Hey everyone, I'm going to make my case for why Qualcomm is an excellent artificial intelligence stock to buy at current valuations. In fact, I think you might regret missing out on this excellent AI stock at these prices. Now, I know you might be saying, wait a minute, the stock price is already up so much in 2024. Is there still room to go? And I'm going to argue yes. And let me share with you all the reasons why I think that's the case. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so starting with its latest quarterly results, Qualcomm management saying that they are pleased to report strong quarterly results with earnings per share exceeding the high end of their guidance. And they have upcoming launches with their Snapdragon X platform, which is going to enable leading on-device AI capabilities across multiple product categories. And one of the areas it's going to benefit from is the rising personal computing industry starting in 2024. And it's in a good position right now because that industry is set to increase at an increasing rate starting in the midpoint of 2024. And in 2025 and 2026, it's expected to accelerate. So the timing of this release is really, really good for Qualcomm. And then, of course, its legacy smartphone segment hasn't done well in the last year or two, but that industry as well is poised for re-acceleration here as the replacement cycle starts to take hold. As these products get infused with artificial intelligence, the average selling price for each one of their chips is going up. And so that's going to fuel growth in that segment as well. Like I mentioned, growth was not great in the latest quarter, just 1% increase year over year. But growth is expected to accelerate Q3, Q4, more so in Q4 than in Q3. Net income jumped by 37% up to $2.326 billion. That was mostly because of investment income, not so much from operating activities. I prefer profit growth from operating activities instead. Longer term, I highlighted Qualcomm stock price has performed well. It's up to $210 per share as of this recording, near record highs. Qualcomm, for dividend stock investors, has increased its dividend per share since 2015, where it used to be around 42 cents per share. It's now almost doubled to 80 cents per share per quarter. So annually, it would be higher. So if you're looking for dividend growth, Qualcomm is reasonable to expect to increase its dividend per share over the next several years as these new product categories are ramping up. I talked about the new chip that's going to help in personal computing sales. They've also got some nice growth in the automotive segment that's supplementing the business in smartphones. Operating profit margin has been solid for Qualcomm over the last decade. Remember, it's a cyclical industry. Just like any semiconductor stock, it goes up and down, and Qualcomm is no different. But even when it goes down, it's still positive. And then when it goes up, in the upturns, it reaches above 30%. Recently, 22.56%. And it looks like coming out of this cyclical downturn on this next upswing, it's likely to reach levels at 30 or above again. Now, the analysts on Wall Street that are following Qualcomm stock, they expect the company to grow earnings per share by 11.29% over the next 5 years, roughly in line with the earnings per share growth expected from the S&P 500. In the previous 5 years, Qualcomm did a better job growing earnings per share at 28% per year. But remember, there was a boom in electronic sales, in smartphone sales in the earlier stages of the pandemic, and Qualcomm benefited from that trend. Unlikely to return to that kind of boom cycle, but the upcycle is still likely to be solid for Qualcomm in this current phase. Similarly, Qualcomm's cash flow from operations has done well over the last decade, again with the same kind, the same kind of volatility, the same kind of cyclicality you see in the operating margin, you see in its cash flow from operations to sales. But lately, in the most recent trailing 12-month period, a 36.4% cash flow from operations to sales for Qualcomm. Now, that's a solid metric. Anything above a 25% I consider really good. And when you're approaching 40%, you're now reaching the excellent levels. The best in class are up towards 60%. So that's like the best of the best of the best gets up to 60%. So Qualcomm is close with 36%. I mean, not very, very close, but it's approaching those really good levels, and that's solid, especially when you compare it with its valuation. It's trading at a forward price to earnings of just 18.69. Some of those companies that I mentioned that are, with cash flow from operations to sales closer to 60%, operating profit margins closer to 60%, they're trading at much more expensive valuations. Just two of those names are Nvidia and Visa, and they're trading at forward price to earnings closer to 30 than Qualcomm, which is trading at a forward price to earnings at 18.69. So sure, you're not getting the kind of growth, you're not getting the kind of profit and cash flow as some of the premier semiconductor companies, but you're getting the company at a much lower valuation compared to some of those premium companies. So for all those reasons, I think Qualcomm is an excellent semiconductor stock. You can buy here at current valuations, and you can see I updated this recommendation on May 27th. My rankings, of course, are vary, and I have stronger ratings than a buy, so Qualcomm is not my favorite stock. It's not my top stock. There are many stocks I like better than Qualcomm. If you want to see the full list of those, check out my video on my top 25 stocks to buy in 2024. But I have it rated as a buy, not a top stock to buy. So there are some that I like better, and there are some that I like worse. For instance, I have companies rated as a borderline buy. I have some rated as a hold, and I have some rated as sell. So Qualcomm is up there as a buy, but it's not one of my favorite stocks to buy. So take that with a grain of salt and understand that with every stock, there are risks associated with the investments. And Qualcomm, this new Snapdragon, it's an ARM-based chip. It's expected to do really well, but it might not do really well, right? So it doesn't always go as expected. And that's the risk you take as an investor is, do you feel like it's a reasonable risk versus return? And given Qualcomm's history, I showed you its historical cash flow from operations, its historical operating profit margin, it's reasonable to feel that they will be successful in these new product launches because they've done well in previous product launches. So they have a history of successfully introducing newer products and those products generating good profits and good cash flow from operations for investors. So you have a basis to go upon to feel confident the investment could return solid risk versus return for shareholders in the long run. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.